It's not easy money, you know? It's not where in 3 months or 6 months, you're going to be making all this money. Yes, it is a very successful, very rewarding career. It can be whatever you make out of it, right? But you have to put in the work. As a new realtor, how much money do you make the first year?
My first year I made $3,500. I made $3,500. Yeah, no, it's rough.
I've talked to so many kids, like young kids in their 20s, that they have to go through the licensing application, everything to be a loan officer. And then once they become get licensed, I tell them, listen, it's going to take a while.
This year is for you guys, the movers and the shakers, the motivated and creators, the big thinkers, the big dreamers, the outliers, the one pushing the needle forward, the students of the game and the ones making their lanes, the ones that get things done and know everything is one. Welcome to your pod, the Everything is Everything podcast. Let's go.
Can't ignore it, this my story, I've been more than ready. And this stuff I'm cooking up, it's like culinary. True intentions, must I mention, it's just legendary.
Hey guys, welcome to the Everything is Everything podcast. My name is Vladimir Ledesma. I am your host. Today we have a very special guest. We have a lender with 20 years of experience who's coming to share some wisdom and knowledge with us, who's done this from Florida to New York and everywhere in between. My good friend, Carlos Zambrano. Carlos, pleasure, man.
Thank you, bro. Thank you. I appreciate it.
Tell us a little bit about yourself. We're going to get into all the conversations that we're going to get into because we got so much to cover. We always have great conversations.
Yeah.
So tell me a little bit about what got you into the industry and, you know, to the point where you are today.
I got into banking here. I was a teller with Bank of New York in Cornwall.
Okay.
Yeah, and then before that, I worked for M&T Bank in White Plains. In White Plains, right here in White Plains.
Oh, so you used to live out here? Or
no, I used to commute.
You used to commute from over
there? Yeah, because
there.
I always wanted to get into banking.
Got it.
Because, you know, coming from, you know, third world country, you always see, you know, you always want to work in like these tall buildings and have all these high positions or whatever. Yeah. I just didn't know how, and I dropped out of college, you know, and I didn't have a ways or anything like that. And I was like, you know what? Let me try banking. You know what I'm saying? So I went and I had a little bit of experience working at different little tiny retail stores or whatever. They said, okay, have a little experience. You know, we'll take you as a part-time teller. You know, a little bit. Then I, you know, worked my way up. And then eventually when I moved to Miami, I said, okay, you know, all I know is banking. Let me continue banking. So I continue work for different banks, credit unions.
And you're already a lender?
No, I wasn't. No, this is still in the early, when I was in my 20s still.
Got it.
So then, you know, in 2005, 2006, you know, there was a need for bilingual loan officers.
Especially in Miami.
You know, especially in Miami, you know. And when I moved to Miami, my Spanish wasn't really that good either. Because, you know, growing up here, everybody speaks English, right? Especially in the 90s and in the 2000s, speaking Spanish was still being frowned upon between the Latin community. So everything was English. So when I go down to Miami, it was weird because people look at you, they know your name's Carlos, you look Hispanic, so everybody has the expectation for you to speak fluent Spanish.
Yeah.
You know, and I was like, you know, like stuttering, and I was like, I couldn't finish a full sentence in Spanish. And I was like, my first 2 years, it was
Cornwall got a hold of you.
It's upstate, bro. It's
right?
upstate.
Cornwall got a hold of you.
So then,
definitely not a big Spanish community in Cornwall. Now, so you
no,
went to high school
even now, there's not a big community.
That's what I mean.
You know? But in Miami, you know, going to a Walmart, walking into like this is one thing. When I first moved into Miami, and I go to a Walmart, right?
Right.
And I didn't have any furniture in my apartment, so I go to a Walmart, a local Walmart, and I'm at the door. You know, they have the greeters, like, hello, how are you, whatever. So I go there, I'm like, I'm looking for an air mattress, you know. And this guy looked white. Era un cubano, but you must look white. Yeah. And then he just looks at me like confused, right? And I'm like, yeah, air mattress, where can I find one, you know? And then he just looks at me, like maybe I'm not Hispanic, right?
Yeah.
He asked in Spanish, like, oh, tú no hablas español? Pero un cubano, like with a heavy Cuban accent.
Oye, chico, pero tú no hablas español.
Oh, pero tú no hablas español. So I was like, no, sí. Pero necesito un air mattress. Because again, my Spanglish, right?
Yeah.
I spoke.
You're like, I don't even know how to say air mattress. I don't know how to say air mattress, right? Yeah.
So then I was like, I didn't know how to say it. And he didn't know what I meant. He didn't know what air mattress was.
He's like, this is Cuba, brother.
Yeah, that's what I'm saying. So then I was like, then he found somebody else who then found somebody else, and they knew what an air mattress was. That's how the culture shock was different. So my Spanish wasn't even that good, you know. So when I came here, when I was younger, I went to school in Peru and everything else, but the lack of practice, and everything is practice.
How old were you when you moved from Peru?
12, 13, around.
Oh, all right. But you moved up pretty big.
Yeah. So my Spanish was pretty good. It's just the practice. Because I'm in my mid-20s.
Well, in its prime years, right? Because that's important. It's like some people will be like, oh, how did you forget? But in those prime years, if you just really engulf yourself into speaking English,
exactly.
you could lose some of it.
And not just that, but the mentality was like, if you speak Spanish, it gets frowned upon.
Right.
So that was the thing. If you had that, you carry that mentality through your teens into your 20s. And then you go down to Miami where everything is the opposite. It's like It's like embracing Latin culture. Everybody's speaking to you in Spanish, and you can't finish a full sentence because you use Spanglish a lot,
right?
And then everybody's like looking at you, and then you start like their Spanish over there is very well pronounced. Their vocabulary is very expanded.
Right. It's proper, yeah.
Very proper. Like a lot of Colombians down there, Argentinians. I was like, damn, I gotta get back into the culture.
Yeah, to get back.
And eventually my Spanish, I was there 14 years. But then it got better, and then I got reacquainted, in touch with the whole culture and the
That's a long time. You were down there for 14 years.
14 years.
What made you come back up?
Money, bro, and the family. My mom's here, my sister's here, everybody's here.
It was more easier with the family.
Yeah, with the family it was definitely better.
Your wife she's from down there?
She grew up in Buffalo, New York.
Whoa. And then you met her in Miami though.
Yeah. Well, we had that in common. That she had just moved to Miami. And I had already been in Miami for a little bit. Because dating in Miami is crazy too. It's for like if you're single. But if you're looking to settle down or have a family, you can even look it up. It's tough, bro. It's tough. It's tough because there's a lot of good-looking people, and
it's a little like Los Angeles. I guess New York could be like that too. The city,
like the city,
could be like that, right?
Yeah. Because everybody's just having a good time.
Yeah,
clubbing. It gets kind of. It gets kind of wild, but
good times.
But eventually, it gets played off. It gets played out.
Right.
You eventually just want to settle down a little bit, and Miami just wasn't it. So then, her and I were linked up. She finished her school, and then we was like, okay, let's start over again, but let's go back to New York, and that's it.
That's when I met you. Is that when you came?
Yeah. I had just met in 2019. I had just moved back. To New York. And that's when I met you at that conference.
We met at the Bold. At Bold.
Kelly Williams, Bold. Yeah. Anthony's Pier 9.
Yep.
That's where it was.
That doesn't even exist anymore at Anthony's Pier 9, right?
No, I think he got,
they changed it?
During COVID, I think,
closed down.
Yeah, but you were lending, I think, still back then.
I was agent and lending.
Agent and lender, right? So,
yeah. But new in both.
In both, okay.
In both I was new. Okay. I got into the industry in 2018.
Mm-hmm.
I was in retail before that.
See, when you told me you were lending, I figured you had already been doing real estate, and now you're doing lending. And at that moment you were just dabbling into getting into lending.
Got it. I was new in both.
Okay.
Just trying to figure it out.
But did you have? So that was your full-time job then?
Walden Savings was my full-time job at that time. That was my full-time.
So you had your little base salary.
I had my little. That's why it gave me my training wheels. To leave my to leave the 9-to-5 world.
Mm-hmm.
Not really though, right? Because that's still a 9-to-5, but it gave me the flexibility that I had never felt before of creating my day.
So which of the two did you start first, real estate or banking?
I literally started them simultaneously. You would say, but I mean, lending was definitely the forefront at that time because they were paying me, and I still felt like the obligation of I got a boss looking over my shoulder, which was ultimately why I left.
Yeah. Okay.
Yeah. That's.
How old were you back then?
How old was I?
Yeah.
I was already older. I didn't start doing any of this until I was 31, 32.
You're what, 38?
Right when I had my daughter, 38.
38, okay.
Yeah. The year you met me, I had only been in it for a year at most.
Okay. Yeah, I had already been doing mortgages for way too long. And as a matter of fact, for a moment there, I was like, okay, should I try something else? Should I try something new? And I did look into title work, even real estate for a little bit. I took the class, insurance, and I'm like, but every business, those businesses, besides real estate, it takes time. Like with insurance, it takes time. With title, it's more volume. And I was like,
Well, with lending, it takes time. You already just did all the hard work.
But I already knew. I already knew mortgages when I moved back to New York.
That's what I'm trying to say. You had already done it. So you were like, I know how I'm going to establish a business.
Yeah, I mean, like everything. I mean, every state's a little bit different, right? So like Pennsylvania is different. Connecticut's different. Florida is different. So it's just learning. Like, for example, if you do a pre-approval in Miami or anywhere in Florida, it's different than if you do a pre-approval up here. Why? Because they're not big deals, but like if you do homeowners insurance, I always do like an estimate on how much a homeowners insurance is going to be in New York versus how much a homeowners insurance is going to be in Florida. Homeowners insurance
because they're going to all have flood insurance.
Almost all of it,
more,
and there's for example, you can pay $3,000 or $4,000 a year in homeowners insurance in Miami. Here you pay what, $900, $1,200, maybe $1,400.
Yeah,
you know what I'm saying.
That's crazy.
So the debt to income ratio was a little bit different.
But the taxes are a lot different.
Taxes is different too, but there's more taxes here because
that's what I mean. Taxes are way different.
You know, so things started changing a lot. I had to get adapted, and a lot of people didn't know me. You know.
Well, that's where I was going to give you your props, though, and I think that's your networking.
Well, it's kind of like
phenomenal because I remember that's how I started seeing you. Like I met you that day. And that was cool. Oh, I met you. Okay, cool. But then I started seeing you on my social media on everybody else that I knew. I was like, let's say like a year's time passed. I leave lending. Now I'm full real estate. The number one rule is marketing and networking, which is for lending as well. I didn't comprehend that though while I was doing it properly.
Because you were working for a bank.
I was working for a bank. So I didn't comprehend that properly. Now I'm in the field. I'm out here. And I'm meeting all these people, and I'll go on their social media. Who do we have in common? And with almost everybody, Carlos is here. And then I remember even the yearly event that they do in Atlantic City.
Oh, yeah.
I had
Triple Play.
I had met some like New York agents, right? Like some New York City agents at a couple events I went to.
Right.
And then I had them on social media, and I look, and you're over there taking. I'm like, how do they know Carlos? Carlos is all the way upstate, like. But that just shows your work ethic and how you really came boots to the ground.
Well, I had a strategy. When I first got into mortgages, I was single. Well, no, in banking, I was single. And social media was kind of like a dating for me, right?
Right.
You know? So what I used to do, what everybody does when you're single and you don't use social media for business purposes, right?
Right.
So you go into social media and you just befriend people that you find attractive and see if you link up and whatever, right?
Right.
So once I got into mortgages in Miami, I was like, you know what? Let me use the same strategy. Rather than be searching for all these cute girls or whatever, let me start searching for something that goes hand in hand. I'm like, okay, Miami's full of beautiful women.
Right.
And a lot of those beautiful women were realtors.
So Makes sense. Yeah.
So, and the thing is that I'm like, you know what? Let me see if there's a connection, right?
Yeah.
So I think I was like, okay. So I started looking up, real estate associations and groups and this and that and blah, blah, blah. And I was like, oh, she's cute. You know what? Let me just adding a whole bunch of real. So eventually.
Sorry.
So it was sort of like that. So then I was like, and I started clicking and started working. And I'm like, you know what? When I move to New York, I'm gonna use the same approach, right? As a matter of fact, when I knew I was moving back to New York, I started already using that approach. I'm like, you know what? Let me add this. Like, I started adding people from like different brokerages and different areas and blah, 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 who I just saw myself working with. By the time I got here, I sort of already knew some people. Like I had already pre-connected. I was planting seeds even from before I moved to New York. So then I'm like, okay, you know what? In Miami, I used to drive everywhere. I used to drive to Orlando, West Palm, Broward, Homestead, everywhere, within the area.
Right.
So then I'm like, you know what? When I lived in New York, when I lived here too, I always commuted. Like I commuted to White Plains.
Yeah. So you're like, I'm gonna do the same thing.
I used to go to Rockland. I used to go to Jersey. And even then in my single years, in my early 20s, living in New York, I had amiguitas like Westchester,
wherever I gotta
Stanford,
go.
whatever I go. I had a girlfriend in Elizabeth, New Jersey.
Yeah.
So I was like, I've always driven. I've always been like different places. I just did it for the different reasons, the wrong reasons. And then I was like, you know what? Let me make money. And that was my approach. That's how.
How long did it take you to really catch fire in New York? Well, because you still had the Florida business sustaining you regardless, because you were still doing business in Florida even here.
Yeah, but that started dying down. The less present you are in one place, the more they start forgetting about you. Like if the people need to see you, people need to see, just like you started seeing me at different events. In Miami, I used to pop up like in every event. Like any major event, right? People would be like, oh, there's this one thing here. There's a Christmas party here. There's this presentation here. And I'll be there with like, my group, my guys, we would have a group in there. We just show up. So
you started doing that here.
I started doing that here as well. I started to see who is who, with EXP, with who are these teams, who's producing, who's not producing, things like that, and who am I connecting with the most? Upstate is always going to be a challenge, I think, for a minority, somebody that wasn't born here, Hispanic, just because it's still new to them, upstate. So the people that I connect with the most are people in Rockland, in Westchester, in the Bronx, Queens, but those are farther places, so I always have to like drive everywhere. Right. But I
really drive just to meet them, because not necessarily to get there, not necessarily to do the work of the transaction.
No, yeah, of course, yes, to meet them. It's like, taking you out to lunch, or let's go to this event, or we should work together for whatever reason. So so that was I took the same approach, of being single.
So you get most of your business down here.
Yeah, most of my business. Well, it's 50-50 now, because what's happened since the pandemic, a lot of Latin realtors have moved upstate. Like there's this girl, I met her through, she moved up to like Dutchess County, and she actually goes to my church.
Okay.
And then there is, he moved upstate. He's in Orange County now.
So Garavito's always been up there, though, no?
No, he was in Rockland before.
Oh, yeah, he was
in Rockland, then he was in Westchester. Mm-hmm. And now he's up in Middletown. And then this other girl, and then there is, you start building a little network up, and there's a few. There's.
So you do feel that most of your business comes from Latinos, though?
Oh, yeah, by far. From here and there, I would say it's a 60-40, where 60% of my clientele is Hispanic, and the other 40 is like a good mixture,
Okay.
Like I do a lot of policemen, firemen, nurses, things like that.
How you get that business?
Through just referrals.
Oh, through referrals, and then they keep referring.
Yeah, like the policemen, they would be like, hey, listen, I'm looking to buy a property upstate, right? Which is happening a lot.
Right.
And then somebody that I help them buy a property in Middletown, they'll be like, you got to call Carlos. And that's where the service comes in, right? If you do such a great service, they'll refer you.
Yep.
Like that one policeman, as far as I know, has no realtor, right? So then those are the few little instances where I'm like, you know what, let me reciprocate to one of my agents and send them a deal. That other ways it would
Yeah.
So I get those, like even a nurse or somebody within the medical field, they would be like, hey, Carlos, help me. I bought my house even in Connecticut or any other state. Mm-hmm. And they'll be like, hey, listen, call Carlos. So just that word of mouth kicks in a lot more now. It's different than if you're a brand new loan officer and you're still trying to like build your brand, kind of like when you met me.
Yeah.
Nobody, you haven't really closed any deals to somebody say, hey, let me refer you to Carlos, right?
You gotta put in the legwork before they actually start referring it out.
That's how it is. But it takes time.
So you're like 50-50 right now. A lot down here, a lot up there.
It's easier here. Like if I lived here, I would probably be killing it.
Yeah.
If I lived like in Yonkers, New Rochelle, I think I'll be killing it more.
Because of the connections you can make with realtors.
It's easier. Even non-Hispanic people are used to dealing with Hispanic people, professionals, whether you're a CPA, a doctor, attorney, lender, whatever.
Okay.
Here, they're more used to seeing different names, people with different accents, if you're Indian or Asian or Jewish or whatever, right?
Yeah, it's more culture.
It's more culture, but you go...
Yeah, it's funny. You think that, so like, it's a little different.
People are used to it. You go down to your neighbor, whatever, it could be a Middle Eastern guy, right?
Oh, yeah. Here, I go to the corner store and we got an Italian guy, like fresh from Italy.
But they're used to dealing with you.
No, we got an Italian, an Arabic guy that runs the store.
Yeah.
We got the Jewish guy that's coming right in behind. Like, it's everything. It's like a melting pot. I love, like, just that I love about down here. Like, going to the store and I'm like, it's crazy. We got every single nationality in here.
So we have that upstate too, but it's in like Newburgh,
but it's more sprinkled, and it's more sprinkled.
It is more sprinkled.
Yeah, no.
So where I'm at right now, it's very residential.
Right.
It's top schools, everything else. But at least I can tell my kids, go out there, vete a jugar, whatever, go outside.
Right.
And I have like no fear or nothing, because the sense of community is a little bit different over there, where my kids, our neighbors' kids, they can come to my house, and if anything happens, I tell them, listen, just stay over or whatever, tranquilo,
Right.
That's how it is. But down here, I just feel like it's a little too chaotic for me. Like if you're gonna have a family,
right?
Like if you're single,
not Westchester.
Well, it depends like Tarrytown or I always like Tarrytown. I looked into buying into Tarrytown.
I love
Sleepy Hollow.
I love Sleepy Hollow and Tarrytown. That's such a community base, but it's got its little good and bad. But mainly, I love that town. That's a great town.
That was the town where I wanted to move to. Well, I have family in Tarrytown.
Yeah.
So that's where I wanted to move to. But when I looked at the numbers, bro,
The numbers are wild. The taxes are wild.
I was looking at this house. This is like 2 years ago for $650 in Tarrytown, which is right now it's probably like $800, right?
Right.
So back then I was looking at this house for $650. But the taxes were like almost 17, 16, something like that.
That means the taxes are now 24.
Yeah, probably.
It's crazy over there.
And it's the school, it's the lifestyle, And you pay, you pay for what you get, It's like if you I drive a nice truck, right? I know the maintenance is gonna be this much because it's the upkeep, But if you buy, another, a Ford.
I love where you're at because that's a nice to me. Well, I'm too though, so I could be biased. Balance an hour out from here.
Yeah.
It's not a big deal.
Yeah.
You're in Cornwall, actually, so it's like, it's an hour. It's an hour because you're a little
It's
deep.
up an hour, yeah.
But an hour flat, you're right here.
Yeah.
Like, that's why I still do the commute going that way. I do need to get my business down this way, though, because I'm right here.
Well, that's the thing
I still have a lot of business up there.
Rarely does any business up there.
Because he's from here. Well,
exactly.
And he's built his thing down here.
But that's what I'm saying. Still drives down here every single day for the showings or the appraisal or the inspection.
Drive nowhere.
No, he doesn't.
For the listing.
Well,
for the listing, but yeah.
But that's what I'm saying. If there's an inspection and he wants to be there presently, or for the appraisal because of whatever reason, you know what I'm saying? He still needs to be up here.
That's mainly the buyer side.
That's mainly the buyer side.
That's mainly the buyer side.
If
We eat all that grunt.
But if you're a seller agent, wouldn't you want to be present just in case, I don't know, something comes up?
I guess
I'm guessing. I don't know because I don't get to see that side of the business.
I guess that's personality.
Because I've seen it, like they're like, yo, it's my listing, but I'm gonna be there just to make sure the appraisal doesn't, whatever. I'm like, all right.
I think it also matters on volume. It matters what kind of volume they're doing.
Probably.
That's feasible if you're doing like 15 houses a year, but if you're selling 50 houses a year.
But it's also the value. I mean, if you're selling an $800,000 property or a $350,000 property, are you gonna do that commuting all the time as well?
And the other thing is though, down here, everything is $800,000.
That's what I'm saying. So it's worth it for him to drive down here. But
also, you don't have to because they don't even see it like a big number.
Oh, because it's the norm.
Right. Up there, 800 is like, oh, I got a big deal.
Yeah, it is a big deal.
An hour out down here is like 800. Like, what do you mean? You can't buy anything for less than 750, which is crazy for me because I get to see that, because I'm dealing with clients from here and I'm dealing with clients from there, and then I'm dealing with sometimes with people that are like complaining, but it's 400. I'm like,
I know.
There's nothing for 400.
I see it because as a lender, right? That's the biggest difference. We see the huge fluctuations where I could be doing a 2-family property up in Rochester, which is near Buffalo, right?
Yeah.
For $190,000. Right?
Crazy, yeah.
And the buyer is still like, maybe I can find maybe I can find something cheaper. And I'm like, something cheaper. It's 180, But
it doesn't matter because their market,
exactly,
right? If they work up there, but a lot of the people that are saying that work here.
Yeah, same thing.
Most people are moving up.
Yeah,
right?
Everybody's moving up. Everybody's been pushing up ever since, especially COVID.
Especially since COVID.
So all the people from like Orange County, where I'm at right now, right? All of those people that back in the 90s, they lived in a very country, I'll say like a bubble kind of lifestyle, right? They rarely will go like different places. The minority were people that were commuting down to the city because they have city jobs.
Right.
Now, it's a big wave of people moving to Orange County. And now those local people, they're moving where to? Sullivan County. There's Sullivan.
They're going up even more.
Ulster County, they're moving up. And those people from over there, they're moving farther up. So it just keeps pushing up and up and up and up.
It is true. Because I have I still get so many clients that are actually from up there. Mm-hmm. And now I'm going even further. Like the Middletown people are going to Port Jervis.
Yep. Well, that's,
New Windsor people are going to Wallkill. Everybody wants to move, but there's only 25 minutes up because it changes. And I even encourage them to do it because I'm like, oh, all right, you want to get the better price or you want to lose the New York City competition? You got to push the Wallkill. Yeah. You got to push the Port Jervis because Middletown, guess what? All the police officers want to come. They don't mind. They don't mind the drive. Newburgh, New Windsor, Cornwall. Everybody's down to come from the city to Cornwall. It's an hour flat, good schools, everything. They're like, yeah. Once you start passing Newburgh, they're like, wait, that's too far.
Yeah, because it starts getting more.
Now it's like an hour and 10 minute commute. It becomes a lot.
That's Ulster County, I think. Once you go past Newburgh.
Ulster is Wallkill, yeah. It's Ulster, yeah.
Yeah, I think once you start getting up there, yeah. Even up there, there's a lot of new construction going on up there.
I mean, but New Pulse is like the...
No, New Pulse is just up there, yeah.
But that doesn't even count because that's like a second, like that's for your second home. So now you get back to like, there's a lot of money that goes up that way. But they go up there for Lake Minnewaska and summer retreats and...
Yeah, like those places, right? So, for example, Catskills.
Yeah,
right?
exactly.
Catskills,
it becomes like that.
It's starting to be now more than just tourists. It's a little bit of everything now.
Yeah, now people are willing to move because a lot of people are working from home.
Mm-hmm.
So you get a lot of that too.
That changed that. A lot. Yeah, so prices are going up regardless, bro.
I know. It's crazy. What would you recommend for people? Like, what do you think is best for people to do? I know this is what we were talking about last week. Mm-hmm. In regards of the people that own right now, that are renters, might have some savings, but probably just enough to get into a home. Do you recommend them to get into a home, or do you think that they should just not get into a home? What do you think in that sense?
Well, you know, when you apply for a mortgage, a lot of people tend to think, well, the bank's got to help me, or as a loan officer, that they come with that
what
approach.
Can you do for me?
Right? Yeah, what can you do for me, right? And I usually tell them, listen, you know, do like a self-assessment, right? Some things are common sense, right? If you know you've missed your payments on your car payments or your credit card payments, and you know yourself to do a self-assessment, if you look at your bank statement and you see overdraft accounts, fees, and so forth, you know, I was a banker, so I used to see people's lifestyles, you know, every single day you get your Starbucks, or every single day you like to, you know, go out, or you go on dates on a weekend and you spend $500.
Right.
You know what I'm saying? So you should definitely do a self-assessment. You should definitely see your practice. And that's something that I mentioned to you. If for the last 3 years, 5 years, 10 years, your practice is gonna help us as a lender to foresee how you will keep going into your future, right? And unless you see changes, right? If you don't see changes at all, then you're going to continue messing up. You're going to continue mismanaging your money, not have any money, barely have any money in your savings. Credit score is going to take a hit all the time simply because you just don't know how to manage your money. Like even myself, when I was in my mid-20s, right? I had a really good paying job. I was working for Verizon in Rockland as a credit analyst, looking at people's applications for cell phones, or if you own a company, if you wanted like 10 phones for your construction crew or whatever. You know, I was just chilling. I was single. I was partying it up.
Right.
I had a nice sports car. I had a Mitsubishi Eclipse, what was in back then. You know, I used to go party with my boy from Jersey, and we just go
Good
crazy.
Time. Yeah.
But my bank account at the end of the weekend, after partying Thursday, Friday, going to Queens, going everywhere, you just go crazy. Then at the end of the day, come Monday, I'm broke again.
Then it's peanut butter and jelly and ramen
soup. So, but if I was to do a self-assessment, and even then I knew I was doing wrong.
Right.
Because you get to like see that cycle. And that was one of the reasons why I left to Miami. Because I was like, this ain't nothing happening here. You know, I'm doing the same thing.
I don't know you chose the right place to go to, but well, to fix that problem.
Well, that was another plan in itself because I was tired of the cold weather. I was tired of my family breathing down my neck, trying to tell me what to do. Oh, you didn't go to college or you didn't finish college.
Right.
Why don't you try this? Why don't you try that? Why don't you sign up for, mailman or police or correctional officer or
like
whatever? And I'm like, you know what? Everybody just keeps breathing down my throat. And I'm like, nah, man, I'm leaving. And I got tired of the cold weather. And I was like, you know what? Let me just go to Miami. I like the hot weather. I like the palm trees.
Right,
I like something tropical. I want more Latin people, this and that. So that was the reason I moved to Miami. But
going back to the financing though.
Yeah, to the financing. People should just take a self-assessment and just see truly where they are, because the bank doesn't owe you anything. The bank doesn't owe you anything at all. And that's the thing, that when you're applying for something, your pre-approval letter is kind of like your job resume, right? And like let's say right now we are applying for a job and you're my competition because you probably did finish college and I didn't, right?
Right.
And maybe you have more job experience than I do, right? So then my employer is going to choose between you and I who's the strongest candidate. Mm-hmm. So when it comes to lending, it's the same thing. As a seller, right? If I'm selling my property and I see 2 pre-approval letters, right? One is for an FHA loan with a down payment assistance program, right? Or maybe you're asking for concessions because you don't have all the money, right? And then I have this other client with not an FHA, maybe they have a conventional loan.
And 20%
with
down.
20% down, right? Yeah. And then asking for concessions, no down payment assistance grants, none of that. Who is the strongest suitable candidate?
Right.
So the bank doesn't owe you anything. I don't owe you anything. I will help you to the best of my ability.
Right.
But at the end of the day, At the day, it's an assessment.
Taking more accountability.
Yeah, it's all about accountability. It's kind of like in your business, right?
Yeah.
It's all about accountability. If you wake up late every single day, right? If you're not following up with your clients, it's all about accountability. You can't have an expectation or a mentality of, oh yeah, people just owe me business just because I'm that good. No, you have to hustle no matter whether you've been in the business 3 years, 5 years, 10 years, 20 years. There's still people hustling out there that have been in the business 20, 25 years.
You know what the craziest thing about like grants and those things are though? Mm-hmm. To me, I'm not opposed to them. They're great. But the people that I see that take most advantage of them mm-hmm. are the people that actually don't need them.
Yes, it is. It's true.
So that's the other part of that. Mm-hmm. Because like I have a bunch of people that ask me all the time, usually, right? Our Latinos and most of those people are going to be the ones, you know, I will lo quiero bonito y barato.
Sí, bueno, bonito y barato. The 3 Bs.
Yeah, the 3 Bs. And they're like, oh, so what kind of discount can I get? Or what kind of grants are there that I can get for this closing costs, this down payment, whatever the case may be? I'll tell them, well, there's this option, this option, this option. I'll be honest with you, though. Most people don't even do it, the grants, because they usually have steps that are needed to get them.
Yeah.
They need to do a course, or people will allegedly go do the course and then just disappear for who knows how long.
Yeah, people don't have patience. People don't want to invest.
To do that process, right? Like, and then the people that take advantage, full-blown advantage of certain things sometimes, that I see at least, are people that are like 100K saved in the bank. Mm-hmm. But really don't need this. Like, I'm like, wow, you really... They're like, no, but I know that I can get it. Mm-hmm. Like, and I've done the course. I already did. I got them the documents that I needed. Boom, boom, boom. Here, I can get this grant. It's like, wow, that's crazy.
I'm thinking people that make money and have saved money, it takes them... They don't want to part away from that money. Right?
So right, because they know how hard it has been to save that.
So I'm like, you know what? I have 50K in the bank. I don't want to let that go. You know what I'm saying? Let me see if there's a way that I can like not spend my whole 50. Maybe I can spend 25.
Right.
You know, and let somebody else pay for it. Because at the end of the day, somebody's paying. Somebody else is paying for it.
Someone's
the money, the grants, and all these services.
Taxes, right?
These are all taxes, state taxes. So all these helps and assistance comes from the state. So somebody else is paying for it, right?
Right.
So, but in many ways, it's money that's there. Yeah, money's already been put aside. There's already a budget in there to help, first-time home buyers buy their homes.
Right.
But at the same time, like you said, it's those people that truly don't need it, right? But then we go into the whole thing of who needs it, who doesn't need it. Because if you need the money, right, it's because you don't have it. And you don't have the money, why? Because you're unable to save. If you're unable to save, it's because you don't make enough money, right? So if you've been renting for such a long time, and we talked about this, where if you're renting for so long and you're doing the right thing, like you said, okay, maybe it's the right guy, maybe it's a janitor who just 9 to 5, blue collar guy, wakes up 9 to 5, every single day, puts in the work and everything else. Is it a service or a disservice to all of a sudden place upon that person the responsibility for being a homeowner, which, as we know, a homeowner and a renter is 2 different worlds, right? Everything falls on you as a homeowner. So utilities are going to be an extra 35% even higher. You have gas, or you have oil, and you have electric, you have water, the maintenance of the house, all of that will fall upon this guy who's for the last 10 years working for the school district, let's say as a custodian, making $65,000 a year, who's been used to paying rent, let's say $1,600 a month.
Right.
All of a sudden, he has a mortgage for what?
Let's say
$3,200. It's double the price. And now you just not just increase his monthly housing expense, but now you increase his utilities. Right. Now everything is on him, right? That's assuming he's a single guy. But even if it's between him and his wife, right? I mean, there is so many variables. So now, it makes it even worse, because now if you are married and your wife is making whatever, and your bank account still at the end of the month, all you have is an extra $250 or $300, or all you've been able to save for the last 10 years working for the school district is $6,000, then are you doing a service or a disservice? Are you setting up those people for failure or success?
Yeah.
You know what I'm saying? And they might be able to afford it, but now you can't take the children on vacations.
Right.
Maybe you can't have a nicer car. Maybe you have to drive whatever you can get,
Yeah.
So your lifestyle changes. So are we really helping or are we not helping? Those are the things where, it's a gray area where, we can't place judgment.
No, but I do like that aspect of it, because I always think of it like, no, it always makes sense.
Because you're a realtor. And that's
I think more as my investor hat is what thinks it always makes
I was
sense.
going to touch on that because on one end, that's the one thing, right?
Right.
That, real estate is the safest through history, is the safest way to build equity. Equity becomes something that you can pass on.
Especially for a non-entrepreneur person.
Yeah.
For a non-investor kind of person.
Like, that's like your little piggy bank.
Right. Like, por lo menos, you invest into your house. Right.
At least you have that. But we work with a lot of investors. We look at numbers. I look at numbers all day long.
Right.
You got to look at the return on investment and everything else. But that person that's working the 9 to 5, they're not really thinking that. They're like, okay, yeah, maybe someday this house is going to be worth whatever. I'll sell it or I'll move or whatever, Like I said, we can't place judgment. It just
depends on their scenario.
It depends on their scenario, yeah.
But so you think, though, it's probably best, so should they stay renting? Or should they look for a multifamily? Right? What do you think is the best scenario? Because even that gets tricky too, right? Because then there's other variables that come along.
So I think everybody deserves a home, but not everybody deserves a house. To be a homeowner. That's what I mean.
Everyone deserves a home, not everybody. You got to earn being a homeowner.
You have to, in the real world, and this is something that I teach my boys as a parent. When you go out there, nobody owes you anything. They don't owe you respect, loyalty, money, guaranteed job, income, nothing. When you go out there, nobody owes you anything. So you have to earn everything. Even when a career at a company, there is always a pecking order, right? If you're an underwriter, if you are a banker or whatever, if you're in a room full of other employees, there's always the one that's the preferred whatever, that's always kissing the manager's butt, whatever.
Right.
That there's other people out there that maybe have more education than you. Somebody may be a senior analyst, maybe you're a junior analyst. There is always a pecking order based on your skills and what you put into the job, right? And then the job puts you under a category under success, or are you under meeting criteria or whatever.
Yeah.
So in the world, there's always a pecking order based on what you earn, based on what you're able to provide, your skills, So you got to earn it. You want a house? Earn it. You want a nice car? Earn it. You want a beautiful wife? Earn it. You want to have this particular life? Earn it. That's my mentality, because that's
real life.
That's real life.
That's real life.
That's my mentality.
No, I do agree in many ways with that. Like, and we were talking about the grants last week, and I was saying, but I think that, that guy that works really hard deserves it. In the perspective that you gave, though, it makes perfect sense as like, yeah, but are you doing them a favor and putting them in that position or not?
Mm-hmm.
I think, but if they can show that they've earned it, or show that they've proven like, hey, yes, I haven't been able to save that much because of whatever, A, B, and C. I got 3 kids, boom, 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 whatever the case may be.
Mm-hmm.
But I've shown that I'm disciplined enough to make these payments. And it's my choice. Like, yes, I'm going to go on less vacations. Yes, I'm going to drive a used car, but I'm going to have ownership on this house. And that's going to be what my focus is to sustain.
Mm-hmm.
I think that that's the right choice regardless for that person. Because I think that...
So there's no right and wrong. It's a personal choice. And you're right.
It is.
And you're right. It's a personal choice.
Right.
When I tell whenever I pre-approve somebody and that pre-approval letter says, congratulations, you've been pre-approved for a house of $500,000, let's say.
Yeah.
Right? But what comes along with that $500,000 is a monthly payment. And I tell the client, listen, this is your pre-approval, $500,000.
Yep.
Your monthly payments are going to be $4,100, let's say, right? And then I leave it up to them.
Right.
And I said, listen, talk to your wife, talk to your husband, 4,100, does it work, does it not work? And you don't need to let me know. I can switch this pre-approval from 500 to 350 or 400 or whatever. And I can give you monthly payment quotes, and you guys make that decision, right? Because it's a family decision. It's an individual decision. It's a financial decision where they make the decision. I don't.
That's the main question I asked.
That is the main question.
Yeah.
So when I asked them, I said, listen, is this something that, and I said, you don't need to tell me, but just talk it over. Is this something that you guys can handle? Yes or no? Look at your lifestyle. Look at the things that you want to get. Look plans in the future. A lot of times, is it a worthy sacrifice of those. Maybe instead of taking 3 vacations, maybe you just take 1.
Right.
Maybe instead of buying the nice big SUV, maybe just buy a regular sedan. Is it worth it? That's not for me to say. That's for you as a family to make that decision.
What are your personal goals as a family?
Exactly.
No, that makes perfect sense. I'm still always going to push for people for home ownership, but in the different ways, right? And I have the same conversation. I usually tell people the same question. I go, I don't want to know what your pre-approval for. I want to know what your monthly is, and I want you to know what your monthly is. Because at the end of the day, that's what you're going to be paying. I want you to know your closing costs, and I want you to know your monthly.
Well, we talked earlier about having a rental property, right? And you don't have a rental property. And I can just tell you based upon how much they can afford. I have one of my tenants, she's a single mom. Another guy who's a single guy who's slightly slower. And then I have another guy upstairs. It's like you're sort of like managing, or sometimes even feels like you're babysitting, because they can only pay so much, right? And if they can only pay $1,400 a month, and the other one can only pay $1,200, they can pay $1,700, right?
Or maybe not, like in this case.
Well, that's what I'm saying. But not everybody. You can't push for everybody, because if everybody wanted to be a homeowner, like truly wanted to be a homeowner, they would be homeowners.
100%.
So there are people out there who are fine, and there's actually some people out there that are saying owning a home is not the best investment, right? Be mortgage free. You can live wherever. Nothing's tying you down here. Invest in other businesses.
Which I agree in that way too. Like, yeah.
But it's a personal preference, right? But not everybody, because the people that want it have to earn. That's how I see it. I mean, like, you can't apply for NYU and just say, hey, listen,
I want to go here.
I want to go here. Give me assistance or whatever, which is fine. There are grants also, but you have to earn your way into it, whatever it is, into X, X, Y, and Z,
No, that makes perfect sense. What do you feel in your 20-year career is like the biggest takeaway that you've learned from everything?
Nothing beats experience. There's no shortcuts. And that's the thing that I would say, nothing beats experience. I've had the opportunity to train junior loan officers, or try to train, actually I've trained a few junior loan officers that have wanted to get into the business. And I always prepare them. I tell them, listen, it's not easy money. It's not where in 3 months or 6 months, you're going to be making all this money. Yes, it is a very successful, very rewarding career. It can be whatever you make out of it, right? But you have to put in the work. As a new realtor, how much money do you make the first year?
My first year, I made $3,500. I made $3,500. Yeah, it's rough.
I've talked to so many kids, like young kids in their 20s, that they have to go through the licensing application, everything to be a loan officer. And then once they become it, get licensed, I tell them, listen, it's going to take a while. Your first year is going to be like this.
Right.
Let's say you make $30,000 your first year, right? But your second year is going to be double, at least $50,000, $60,000.
Right.
Your third year, it's going to be 110. So it just keeps scaling.
And it's all the same thing. Like you said, it all depends on you too.
It depends on you, how much you work you put in it. Eventually, as a single loan officer, there is definitely going to be a ceiling, because there's only so much business you can handle.
Right.
If you have a team, then you start making more money because you get an override over everybody else. It's kind of like if you have a team in real estate, right? Same thing. You make a little bit of everybody else because you are the team lead. But that's the one thing that I would say in my experience, bro.
Nothing beats experience.
Nothing beats experience, bro.
I love it, because you touched on, just to summarize, a couple things like the accountability, your own personal goals. So like if you want a home, anything that you want, you really got to be accountable. Look at yourself, do a self-check, self-assessment.
Self-assessment, yes.
Where you're at. Number 2, you got to know your personal goals and kind of what your heart and desire is. And then experience. Yeah. And for me, a big lesson, which I've actually just learned this recently, is not everybody wants it.
Not everybody wants it.
Not everybody wants it. And I got to get better at realizing quicker. Oh, you're dabbling with this. You're thinking about this, but you don't really want this.
Yeah.
Because you spend a lot of time with clients sometimes, and you're like, it's almost like you're trying to convince them. And it's like, wait, I'm not.
Yeah, exactly.
I'm not trying to convince you to buy a house. You either want to buy a house or you don't want to buy a house.
There is a fun part of looking at houses. Everybody likes to go shopping, right? But it's kind of like you go in window shopping, right? Kind of like if you go past driving a car dealer that you always like. For example, I like an Audi sport vehicle that I like. That I'm like, I'm gonna get it one of these days when I can, if I make enough money, But I like to pull into the driveway and I'm just eyeing the cars. I'm like, damn, one of these days I look at the car, look inside, I look at the numbers, and I'm like, I just walk away. But the same thing happens with houses.
Right.
You look at a for sale sign outside, or a beautiful brick house, maybe a 2-family. You go inside at the open house. You look at the floor, the kitchen.
Yeah.
There's a whole, the process of looking at a house and just picturing yourself in it,
dreaming
until you see the sticker price up front. It's like $899.99. You know what I'm saying?
Yeah, I gotta go.
And then you're like, okay, thank you, yes, whatever.
No, I don't want to. No question.
no question. Exactly. That's what happens at open houses.
Yeah,
and it's the same thing. Not everybody can have it. Not everybody wants it. And if anybody wanted it, then everybody will be a homeowner.
Yeah, I think it's super important to really just in our business focus on the people that want it.
Yeah.
The people that want it.
And even after pre-approval, after showing them houses, they're like, you know what, we're going to take a break.
This year has been a rough one for me with that, to be honest with you.
Yeah.
I'm probably, my income is supposed to be double what it is right now.
Mm-hmm.
But I've had people backpedal so much this year,
because of the rates, housing, inventory.
Rates, but not even that. No, these are people that new numbers, went in, but get cold feet all the way in there. And that's why a lot of people stay away from buyers. And I really don't want to, because I really enjoy the process of getting somebody into that new homeownership. Yeah. That, obviously I got to make a living, but that reward of getting somebody into their house, I feel really good about that.
Yeah, yeah. The feeling is mutual.
Yeah.
All those success stories are good. But this is one question that I asked a realtor. Let's say out of your 10 buyers that purchase the home, and you typically get very close to a lot of them, right? Because you spend a lot of time with them, whatever. Let's say you have 10 buyers. Out of those 10 buyers, pick one that you feel comfortable losing their home, and you never can.
Right.
You never can answer that question, right? Because the ratio of defaulting on a mortgage is below 1%. Right? So it is a very low percentage. But do you want to look at numbers just as numbers, or do you want to see those as real people?
Right.
So that's where lending comes in, and where they're really to protect the bank, but we're really, as a consequence of protecting the bank, where they're also protecting the client.
They are protecting the client. Yeah, I do have that conversation with people all the time. I go, yes, you didn't get qualified, but if you didn't get qualified by the bank wants the business.
Yeah.
They want the business. So if you're not meeting their criteria, then you'd be leveraged.
Exactly.
You'd be leveraged because FHA goes 55% on your
56%. Yeah.
That's a lot. That's a lot of your money. You're eating sardines for the rest of your life.
So there's a quick statistic that I looked at while coming here. Out of conventional, FHA, and VA, the one with the highest default ratio are FHA loans. And FHA loans is the mostly utilized loan product for first-time home buyers.
Of course, yeah.
The one that follows FHA is conventional loans. But conventional loans are like very low default.
Right.
But the lowest one of the three are VA loans.
Really?
VA loans have the lowest default ratio.
Because they put no money up.
These are government jobs.
Oh, right.
You're not going to get laid off.
But even if they're not government jobs, if they were a veteran, they can use it, get a VA loan, right?
You can still get a VA loan even if you're not working for the government. I mean, you can have a regular job, but it's just a benefit, But yeah, for some reason, and the majority of the VA loans that are originated, they're while you're serving. There's a small percentage, or I would say 30% of people that...
You can't do it after you're serving?
You can, but that's what I'm saying. There's a small percentage of people that after they're done serving, they haven't used their VA benefits for whatever reason.
You can only use it once?
Well, it depends. You can use it multiple times, but it depends on the...
It's got to be a primary, though.
It's got to be a primary. But there is how much of benefits have been used. So they have a certificate of eligibility where it says how much of your benefits are left or how much unused you have any benefits. And then you can use that. So a lot of times you have to sell your house where you may have a VA loan in order to get another one so that you can free up those benefits and use them towards the next purchase.
Here's a question you can answer for me. Veteran, my nephew's in the military. Mm-hmm. If I bought a house with him, mm-hmm. Can we buy a house together and him use the VA loan or no?
Yes, but it will defeat the purpose because your part, you will still have to come up with your own 15%. So the 0% only applies for spouses. if you want to take advantage of the 0%.
I would have to come up with 15%?
Like 15% of your part.
So let's say he's buying it with me. It's his primary. Both of our primary.
Yeah.
We're buying a 4-unit building. He's going to live in one. I'm going to live in one. We're going to rent 2.
Right. So it's not 3 units. So you still have to come up with your own down payment. That's pretty much what I'm saying.
But how much of the down payment would it be?
So we have a spreadsheet, and it says if there's a secondary, 5%. It could be like 5%. So if that's the case, you know what I would do, and I've seen those scenarios.
Well, wouldn't it be 2.5%? Because let's say we're getting a loan that's 500, he doesn't need to bring his. I would need to bring 2.5.
You still have to bring up 2.5. So instead of bringing in a down payment at all, right? For him, I would say save your VA benefit for another time. Just do a 3.5% FHA. And buy that multifamily now.
Now here's the thing, because they don't have no closing costs though either.
No, there is closing costs.
Oh, so it's just down payment.
It's just 0 down payment.
Oh, okay. So it's they do have closing costs with a VA loan.
Yeah,
I thought they had 0 down, 0 closing.
No. The 0 closing cost is possible if you have seller concessions.
Got it.
Right. So that's another thing that I encounter a lot. A lot of veterans usually come and say, "Well, it's 0," and they don't know about closing costs, or of their friend or whomever has purchased a property before. They're like, well, everything was included. Yeah, everything was included 10 years ago when the market allowed for concessions.
Correct.
We're not in a market that concessions is popular.
Does it go up to 6% or
3%?
4% concession.
Concessions.
And let's say my half, my 2%, can we be fitted in the concession if I was able to get a concession?
The VA, it's a little tricky when it comes to concessions. Right now, they're trying to follow the same rules as FHA, where it depends who's paying you. If the buyer's paying you, is that what you mean?
If the seller's covered?
Would you be negotiating your pay, your 2% concession? Would you have it where the buyer's paying you or where the seller is paying you?
Oh, I'm not even talking as a realtor. I'm talking as a full-blown investor in the deal with my nephew.
Okay, in that case, your commission, if you want to put it towards
I wouldn't even want a commission.
Costs.
No, not for my commission to cover the closing costs. That's to cover my 2% of, you just said.
Oh, for down payment?
Yeah, for the down payment.
No. Down payment separate. So closing costs and down payment is 2 different things, right?
I wouldn't be able to get none of that concession to cover the down payment.
Not the concession. That would be towards your closing costs. But
okay, so I could do 2% down payment.
What I would do, I would still negotiate compensation, and your compensation can go towards down payment. So that's what I would do if I was a realtor.
Oh,
you can act as a realtor towards your own purchase, right? And you can still get compensation as a realtor.
Got it. So the down payment that I put down, I'll get back as the realtor.
Or it'll be applied towards your closing. Well, it wouldn't be applied, but it would just be given back to you, I guess.
Okay.
Yeah. But I would use the compensation and just to be applied towards your down payment.
So the reason that I say that is I tell my nephew, I'm like, the way we should do it is 4-3-2-1. Buy a 4-unit with this. It's a primary if we don't own anything. And then move next year, 2 years down the road, to a 3-unit because it's better. Right? Because you can explain that easily. Then a 2-unit.
It's not that easy. Underwriters get trained and they get recertified every year. One of their main points that they get like beat up on, saying make sure that whenever you look at property, you look at an applicant buying multiple properties, that they're not utilizing a program that clearly they're buying to become investors. Like if you see a track record or if you see a pattern, right?
Yeah.
Of somebody clearly looking to become an investor and not really be a primary residence. I mean, there is ways of doing it.
Right.
But if that pattern looks like they're just buying investment property just to have multifamily a portfolio, then treat it as an investment property and no longer look at the application as a primary residence.
Got it.
So you have to be careful. So there is a good way we can talk about it.
Yeah.
Offline. Offline. There is a way of doing it. It's not easy. It's not simple. But there's ways of buying multiple properties where it's going to be a primary residence. You're signing a document, an affidavit saying it's going to be your primary residence for the next 12 months. But now, if you're going to apply for another property...
Hold on. Don't even give us nothing. This is where we're going to end it. If you guys want more information, reach out to Carlos, reach out to me, and we'll get that for you. But this has been the Everything is Everything podcast. Carlos, at first, I want to thank you for coming on. Sharing all your valuable information with us, telling us about yourself. Where can they find you? What's your Instagram handle?
So my phone number, if it's okay, let me give my...
That's fine.
It's 646-389-8255. 397-1727. On Instagram, you can find me under Carlito with a K, Carlito underscore home underscore loans, Carlito Home Loans, all separate with the underscore. And on social media, on Facebook, it's just Carlos Zambrano. Those are my two main social media pages. And I'm always publishing information in regards to finances, mortgages, and networking events.
I appreciate you, brother. Thank you for joining us.
Thank you.
Guys, I hope you guys enjoy. Got a lot of valuable information from this. And we will catch you guys on the next one. Until then, I'm Vladimir Ledesma. And this has been the Everything is Everything podcast. Catch you guys soon.
This is extraordinary. Can't ignore it. This is my story. I've been more than ready.